Most Americans are feeling lousy about their finances. Fed study finds. How did we have to go through a study? And by the way, Fed, thanks. You're the big reason why a lot of people feel terrible about their finances, as you flooded the economy with cash and then you raised the interest rate on a bunch of that money. And a lot of people are on variable loans, or all of a sudden they're paying more in interest than they were paying before, which gives them less discretionary spending while the prices went up. So thanks, the Fed. So this article says the share of Americans who feel worse about their finances hit their highest level since 2014. This is what this new report found. And after inflation and a swimming stock market last year ate into their pocketbooks and savings, right? It says in 2022, 35% of U.S. adults reported that they were worse off financially than a year earlier, the highest point since the question was first posed 8 years earlier, according to the Federal Reserve Board's 2022 Economic Well-Being of U.S. Households report was released, right? So 73% said they were doing okay and lived comfortably financially, down 5 percentage points from the previous year, among the lowest levels since 2016. The survey, which was fielded in October 2022, polled 11,000 adults. The slump in financial well-being occurred broadly across the population, Federal Reserve officials said Monday, with almost every racial and ethnic income and education group registering a decline. Well, I wonder why. The price of everything increased due to inflation, which came from the so-called printing of money, which was just dots added to a piece of paper. When they bought treasuries, they didn't actually buy them. They just added to the balance sheet, putting money in the economy. And all of a sudden, everybody's like, oh, why are prices going up? They tried to blame it on, well, there's supply chain issues. And then we found there was a little corporate collusion where everybody just decided to keep their prices up after all that happened because people kind of got used to it. And now people, they're saying, hey, I feel like I've got less money. If they were on variable loans, there's a higher interest rate now, which means there's less for them. I was on a 2% line of credit on my cabin that went up to 8.5% now. That if you have a loan on something like that, you're going to feel that. So this is saying multiple metrics in the report showed deterioration. A higher share of folks reported increased credit card debt, while a lower percentage said they spent less than their income in the month before. Fewer felt the retirement savings plan was on track versus the prior year. There was one bright spot in the report: a strong labor market, which helped to buffer some of those setbacks. So look, it's saying inflation eats at people's wallets. Yes, that does happen, right? This is all kind of part of the problem with printing money, is eventually it's going to flood, just like if you have soup and they're like, no, we're just going to take some of that soup out and put some water in it. And now there's two soups. Well, there's only half the calories. It's not as nutritious, and that's what they did to the money. So it's saying inflation was the most common financial challenge, cited by 1/3 of respondents, followed by general needs at 22%. 2 in 5 adults said their household's monthly savings plan last year increased versus 2021. Energy costs, grocery costs, gasoline, everything we buy now has increased drastically. One survey respondent stated, more than half, 54% of folks, said their budgets had been affected a lot by price increases, with parents living with children under 18, Black adults, Hispanic adults, and those with disabilities more likely to report that, okay? So many took steps to mitigate the rise in prices. For instance, 2/3 stopped using a product or used less of it, while 64% switched to a cheaper option. Almost half put off a major purchase, while just over half cut back on savings. Like, let's think about this. Maybe it is time to look and say, hey, are we spending money on things that matter to us? Are we overspending? Did we get just a little bit sloppy about that? Sure, that's mindful cash management. That's an important thing to kind of consider and look at while you're doing this. On the other hand, like, what can you do about all of this? Well, pay yourself first, create automation with your savings, build up at least 6 months liquidity, invest in yourself so that you learn how to make the most money by creating more value, then learn how to keep more of what you make by being more efficient with every dollar. So you pay less to financial institutions like banks and like Wall Street and like insurance companies, because you get more intelligent and savvy about what you're doing so that you keep more, give them less. That's efficiency, which will boost the bottom line. And then it's about, how do you grow your money? Well, it's focused first on how do you create more cash flow. And when you create cash flow, you can build economic independence, which is a state of having enough cash flow coming from assets to cover your expenses, which gives you more choice and options in life and less stress, knowing that your financial house is in order, knowing that if you didn't go to work the next day or open a phone or get on any form of technology, that money was coming in. Now, you might still have to monitor it, to manage it in order to maintain it, absolutely. But this is part part of what is required, especially considering, yeah, people are definitely frustrated with their finances because they're following a faulty formula of, I'm going to set my money away, I'm going to forget about it, I'm going to wait for 30 years and hope that it all pans out, neglecting cash flow, not paying attention to efficiency, not building enough savings because they're collapsing the name savings and investing. So people are like, I'm saving money in a 401k. No, you're investing money in there. It's in the mutual funds, typically in the stock market, that's volatile, and that there's a penalty if you want to get to it. So a lot of people, because they don't have that liquidity, get in this vicious trap and cycle where there's higher interest rates because they have more on the money on their credit card because they're trying to fund their retirement plan. They're not paying attention to all the efficiencies with all their finances and how that's organized because they're chasing returns with all the stock market news and stuff like that, which neglects them investing in their most important asset, themselves. So there is a different wealth framework that can help things out. So inflation hurts people without assets more than people with assets. People that have a lot of real estate, especially people who own apartments, rents are going up. Inflation's actually helped them in certain ways. For people that have really low interest rates because they got fixed loans on their mortgage, inflation makes it where that payment feels less and less of a burden year by year as inflation starts to be a benefit to them as it eats away at the value of their dollar. So they're paying the same amount for that mortgage, but it's, hopefully wages are going up. And because inflation's going up, that debt, it actually feels like it's less over time. So there are some things to consider there. This says another area of financial concern was saving for the future. 1 in 8 people cited the retirement and savings as their main financial challenge, up for 1 in 10. Well, especially because it's not creating cash flow, especially because it usually has them neglect the things that I'm talking about here of economic independence because they're waiting for so long. A big contributor was that this just has everybody think that stock market investing is the only type of investing, because it said the S&P 500 index dropped 19.44% in 2022 compared to the 26.89% gain in 2021. So when we have all of our reliance and hope in a market that we don't control, that we don't understand, and we don't have any cash flow from, we put our hands and our future in a reliance of something that has a lot of volatility and risk and can actually start to infringe upon our peace of mind and create a lot of frustration that can start to be damaging over time. So when people think synonymously that in stocks and investing are the same thing, what about investing in yourself, your skill sets? What about investing in cash flow assets? Maybe that's intellectual property, maybe that's businesses, maybe that's even real estate. It comes down to your investor DNA. What can you invest in that's aligned with who you are? See, when people's nest eggs are tanked, it's usually because they're overly reliant on one-dimensional thing like the stock market. So this said the silver lining was a stronger jobs market, which, in some ways is good. But if you're an entrepreneur trying to hire and it's hard because there's not many people that are looking for jobs, that can be kind of a downside. And sometimes it's when we have high unemployment that the economy starts to change and turn and people get more innovative and they invest back in themselves. They go get more educated. They think more productively, because there's times when we're fully employed that people are disengaged with their work. They don't love what they do, but they're like, oh, you should just be happy you got a job and it's got benefits. Sometimes those benefits don't benefit you if you're sacrificing who you are and giving up your freedom and neglecting your cash flow and losing your energy every day as you go into a job that you don't truly enjoy. So I just like to discern truth from falsehood in these articles, give you a different perspective, give you the frameworks that they're not talking about here, because most of the time their framework is invest in an IRA, put money aside, just work harder, just work longer, just, scrimp, save, sacrifice, defer. Inflation's just part of the situation. It's frustrating because the stock market goes down, and they're kind of just telling you it's not your fault. But the reality is there are different ways to get a better situation. So if you want to find money, grab the quick tips guide when you go into our description. It's very helpful. It's the simplest things that you can do to discover cash, whether it's missingmoney.com that says, well, here's exactly if you've got checks that were supposed to be to you, but they're now a past address, or you moved or something like that. I've got thousands and thousands of dollars over time because of moving different offices and different houses that, we check on that every year. There's other things on how you structure insurance or how you might pay for a loan that can just put more money into your pocket, which can be helpful to get ahead and to build some peace of mind and help you battle the frustration of inflation and markets that didn't cooperate with what everybody told you they were going to do. All right, if you like this video, there's more where that came from. Click on through and see me dissect another article so you can be more financially intelligent, take back control of your finances, and go out there and build the life you love. Hey, thanks for watching. I appreciate it. And if you're enjoying these videos, well, there's good news. More where that came from, so go ahead and click through and watch the next video now.